The CMC Crypto Fear and Greed Index, a powerful tool that analyzes crypto market sentiment, has fallen to the fear level, indicating that investors are fearful of recent events and the near-term trajectory of crypto asset prices. These fears are not completely unfounded, as the cryptocurrency market is experiencing notable fluctuations, particularly among the top digital assets. On Tuesday, Bitcoin fell to a low of $94,207, reflecting a 1.4% decrease from the previous close. This decline continues a trend observed since mid-January, when Bitcoin reached an all-time high above $109,000. The recent downturn is attributed to macroeconomic factors, including higher-than-expected inflation data, which have dampened investor sentiment and reduced the likelihood of imminent Federal Reserve interest rate cuts. Ethereum dropped to around $2,615.77, marking a 4.6% drop from the previous close. The cryptocurrency has faced significant volatility, with recent price movements influenced by broader market trends and investor caution. XRP also dropped to $2.48, down 6.4%. The token has been on a downward trajectory, with a 19% decline over the past month. However, Solana has taken the worst hit, pulled down by another meme coin crash. According to reports, the sixth largest cryptocurrency has lost about 25% of its market cap since last Friday, as the president of Argentina, Javier Milei, came under fire for promoting a token called Libra on the Solana blockchain. Following Milei's post on Friday, Libra rapidly rose in value before nosediving sharply, causing severe losses for around 44,000 people who had invested in it. Experts believe the meme coin crash has contributed to the wider crypto market unease and expect the situation to fully resolve itself in a few days. Amidst all the chaos and confusion, Real Vision CEO Raoul Pal took to social media platform X on Monday to remind crypto investors of a few golden rules that will help them avoid such brutal losses and significantly profit from what he describes as the greatest macro trade of all time. Before dive fully into the video, bringing you Raoul Pal's insightful posts and other important crypto-related news, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support and enjoy the video. In his tweets, Pal stresses the importance of zooming out in such moments and staying focused on the bigger picture. This bigger picture is why Pal describes crypto and digital assets like NFTs as the biggest macro trade of all time. Unlike traditional asset classes like bonds and equities, which have either managed to underperform or perform at par with the constant debasement of fiat currencies, cryptocurrencies like Bitcoin, Ethereum, and Solana have significantly outperformed this debasement, meaning that in a world where it has become almost impossible, cryptocurrency investors are able to not only preserve their wealth, but also grow it significantly over time. It's a puzzle and also sad to see so many bearish and nervous in crypto when Bitcoin looks like this, Pal begins in his post, or when Ethereum looks like this, or when Solana looks like this, or when SUI looks like this. Please zoom out, Pal adds after each post, with all four accompanied by the respective charts of Bitcoin, Ethereum, Solana, and SUI. By asking crypto investors to zoom out, Pal is urging you not to focus on short-term price movements, which can be misleading, but in the real opportunity that lies in the long-term adoption of cryptocurrencies and digital assets, and the macro trends driving the space. Pal believes that crypto follows an exponential growth curve similar to the internet, where volatility is natural, but the overall trajectory remains upward. He emphasizes that price corrections and bear markets are temporary phases in a much larger secular trend of increasing adoption, institutional involvement, and technological innovation. By focusing on the bigger picture, such as rising user adoption, expanding use cases, and improving regulatory clarity, investors can avoid being shaken out by short-term market noise. In his final tweet, Pal adds, "We remain in the midst of the greatest macro trade of all time. All the wiggles and the timeline FUD are just noise. All you require to capture it is to not be too far out on the risk curve, not using leverage, and the ability to have patience and zoom out. Don't this up." Pal considers crypto the biggest macro trade of all time because it combines exponential adoption, global liquidity cycles, technological disruption, and a shift in the financial system. He believes crypto follows Metcalfe's law, meaning its value grows exponentially as more people adopt it, similar to the internet, but at a much faster pace. He also sees crypto as highly sensitive to central bank policies, benefiting from periods of monetary expansion and liquidity injections. Whenever global liquidity increases, crypto tends to outperform traditional assets. In his view, this makes it a prime vehicle for capturing the upside of economic cycles. Beyond its trading potential, Pal argues that crypto represents a new digital financial system, offering Bitcoin as a store of value, Ethereum as a decentralized computing platform, and other innovations like DeFi and tokenized assets. He sees this as a paradigm shift, where wealth gradually moves from traditional finance into digital assets. Another key reason behind his conviction is the ongoing debasement of fiat currencies due to rising debt levels. As governments struggle to manage debt burdens, he believes crypto serves as an escape valve, providing an alternative system that preserves purchasing power. With younger generations embracing digital assets over traditional finance, he views this as a once-in-a-lifetime wealth transfer and a generational investment opportunity. For Pal, these factors align to make crypto the most asymmetric macro trade ever, one that could generate massive long-term returns as the digital financial revolution unfolds. However, he warns that doing certain things will see investors lose out of this massive opportunity. First, he cautions against over-leveraging, as volatility in crypto can easily liquidate positions and force investors out of the market at the worst possible time. Many traders get caught up in short-term price swings and try to time the market, but Pal believes this often leads to poor decisions and unnecessary losses. Another major mistake he highlights is panic selling during downturns. He argues that bear markets and sharp corrections are normal in exponential growth cycles, and those who sell out of fear usually regret it later when the market recovers. Instead, he advises focusing on long-term adoption trends and macroeconomic liquidity cycles, rather than reacting emotionally to short-term price drops. Pal also warns against getting distracted by day-to-day noise, whether it's media fear-mongering, regulatory uncertainty, or short-term negative sentiment. He believes investors should zoom out and understand that crypto is following a long-term trajectory similar to the internet's rise. Those who stay patient and ride out the cycles tend to benefit the most. Finally, he discourages the temptation to chase hype and jump into speculative assets without understanding them. While innovation in crypto is rapid, not every token or project will succeed. He urges investors to focus on high-quality assets with strong network effects and adoption, rather than gambling on short-term narratives. Ultimately, Pal's biggest warning is that impatience, leverage, and emotional decision-making can lead to costly mistakes. To succeed, he believes investors should take a long-term view, manage risk wisely, and avoid being shaken out by volatility. Pal's unwavering conviction in cryptocurrencies, especially top cryptocurrencies like Bitcoin, Ethereum, Solana, and Sui, aligns with that of many other prominent personalities in the space, including Bitwise CEO Matt Hougan. Like Pal, Hougan has also taken to social media to warn investors about getting caught in the FUD when there are so many bullish events to focus on. In one of his recent posts, Hougan posts an image of the Crypto Fear and Greed Index at the fear level with the caption, "Abu Dhabi bought half a yard of Bitcoin, and the market's still fearful. These days are a gift for long-term investors." According to reports, Mubadala Investment Company, Abu Dhabi's state-owned wealth fund, has made a bold move into the cryptocurrency arena by acquiring over 8.2 million shares of BlackRock's iShares Bitcoin Trust, IBIT, in the fourth quarter of 2024, a transaction valued at approximately $461.23 million. According to Bloomberg analyst James Seifert, this investment positions Mubadala as the seventh largest known holder of IBIT, reflecting its ongoing commitment to diversifying its multi-billion-dollar portfolio, which spans technology, energy, and infrastructure, into emerging digital assets. This strategic investment is part of a broader initiative by Abu Dhabi to embrace cryptocurrency and blockchain technology. In 2023, the Abu Dhabi government deepened its involvement in the crypto space by partnering with Marathon Digital and Zero2 to establish a large-scale Bitcoin mining operation in the region, signaling a clear intent to integrate digital assets into its investment strategy. Such actions underscore the region's proactive stance in capturing the benefits of the rapidly evolving digital economy. Meanwhile, in the United States, institutional interest in Bitcoin continues to surge. Since the approval of U.S. spot Bitcoin ETFs in January 2024, these investment vehicles have attracted over $40 billion in inflows. This remarkable momentum, driven by large asset managers, pension funds, and wealth management firms, highlights the growing confidence in Bitcoin as a viable, long-term asset class. Hugin mentions the rapid incursion of institutional investors into the crypto space through the ETFs in a tweet that reads, "Professional investors now own 28% of Bitcoin ETF assets, up from 17% in Q3. This will be north of 40% by year-end." In a follow-up tweet, he adds, Bitcoin ETF, 13F, AUM by quarter. Q1, $11.5 billion. Q2, $11.1 billion. Q3, $12.4 billion. Q4, $38.7 billion. The Bitwise CIO ends the tweet with a cheeky, "But I thought it was only retail," to counter earlier arguments that institutional investors were not interested in the spot Bitcoin ETFs. In a third tweet, Hugin writes, "Gave a keynote speech at a retail investing conference today. 3 big takeaways. 1. 1/3 of the audience owned crypto. 2. 1/3 was considering allocating soon. 3. 0% had heard of Libra." This shows that the net new buyer of crypto is in a very different place than established crypto investors. The main takeaway from both Pal's and Hugin's posts is to zoom out and ignore the noise. Whatever is happening now, the crypto space has probably gone through worse in the past and survived with hardly a scratch. This is, in fact, time to be more bullish, as there are many ongoing positive developments expected to propel crypto's growth and profitability forward in 2025 and beyond. Please share your thoughts, comments, and observations on Pal's and Hugin's posts and unwavering convictions for the cryptocurrency market in 2025. Do you share this conviction? Or are you fearful that this bull market will be vastly different from previous ones in terms of gains? Let us know what you think in the comments section. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.